Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, June 3rd. I hope you all had a wonderful Memorial Day weekend. It's back to business as usual for all of us. I have been watching the markets like a hawk. I monitored them Friday afternoon as we had some late afternoon holiday trading in the aftermarket, and Sunday night in Europe. As the markets there started to open, I was watching them via my computer terminal and pre-market trading on Monday as well. And we're still seeing a lot of gyrations. I want to go right to the market charts right now, especially gold. This is a new cleaner chart that I've put up for gold for you. You can see this is the low I identified as a bottom, short-term bottom, a little over a week ago when we retested the 1162 level. We have since bounced back off that. This is good bullish development for gold, both short-term and long-term. In the next few days, we're likely to see a test of this overhead resistance again in here, or some sideways action, maybe even a retest of support. However, either way, I'm a buyer. If gold pulls back, I'm going to be looking to buy some top-notch gold miners, and perhaps even add to GLD or gold ETF positions here. And I would be doing the same thing if we broke above this line here. Gold has the potential here to either go sideways for a few more days, test support, or blast off yet again in the short term. I have no doubt whatsoever that the signal I got a couple of weeks ago when gold closed above 1162, which gave birth to the new record highs in gold, is still intact, and we'll see 1300, 1350, perhaps even 1500 by the end of this year. So stay tuned, please, to my recommendations in the gold market. There is a lot of money to be made there in the next 6 months and in the next 3 years. Let's go now to the Dow. The Dow has really been on a roller coaster ride, opening up several days in a row last week, and again yesterday morning to the downside, sharply lower, then crawling its way back, and then selling off again. So the volatility in the Dow is pretty extreme right now. Overall, however, as I've noted in the last couple of months, the Dow is topping, has topped. I recommended, I believe it was at least a month ago, perhaps even 2 months ago, that you exit all stocks except natural resource stocks and especially gold stocks. And that has been the right call so far. I would not, no matter how many times the Dow snaps back from a steep sell-off, I would not take that as a sign of strength necessarily. I would not tempt that. Let that tempt me into buying stocks in here. It is true that the Dow will swing for the next couple weeks, as much as I should say another couple weeks. It could swing between 10,000 and 10,006. However, the trend is now down over the next several months in the Dow, and it wouldn't take much. In fact, this red line here, which is a very key line. It's not developed by any particular chart. I've just put it on here because it comes from my proprietary algorithms on my trading models. If the Dow closes below that 9830 level at any time, you're going to see a pretty steep drop down to 9,000, perhaps even 8,800. So you should have all defenses up. You should be in a bear posture. You should be, if you're a speculator, taking on short positions. And if you're not a speculator, you're a conservative investor, you should not be long the stock market right now, except, as I said before, natural resources and gold stocks. Let's now take a look at oil, where I'm seeing some very interesting developments. There we go. This is an important cycle that I've drawn up here with these arcs here. As you can see, oil has made important lows at every juncture of this cycle, give or take a few days on this one. But just last week, we got an important low under $70 per barrel in the trading window for a low. Oil rallied back up to 76. It's now pulling back to 72, may even pull back slightly to below $70. But I am a buyer there in oil, looking at some of the oil ETFs and a slew of energy stocks. Now, naturally, the BP Gulf situation is weighing on the energy market. That's mostly been digested by the market, the energy sector. It will remain a problem for BP. I would not be a buyer of BP in here. However, I would be looking at other energy stocks that have been thrown out with the bathwater, along with the Gulf incident and the hammering that BP took, and as well as the stock market beating. Energy, like gold, can buck the broader market. So please stay tuned to everything I publish. I'll be looking to buy some energy stocks very, very soon. Till next week's video, this is Larry. Have a good week.